Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 4:30 in New York on Wednesday, 10th day of December 2014, and this is the daily report for gold and silver. We have a mixed bag to lower trading in the precious metals market. Silver just turned unchanged. That was up a little bit. First to gold, 12.27, 12.26 in that area. Puts it off roughly $4 or $5 on the day. Just off of the lows of 12.25.60 and a high of 12.40.40. We'll definitely talk about that high and where this market is in relation to current resistance in just 1 second. Let's update silver. Silver, in essence, trading unchanged on the day right now. Currently trading just above $17, $17.08, low $16.88, high $17.45. You can see this day is a very, very light day, the high and the low, and we basically have a doji candle, which basically says that the market is currently unchanged in terms of its daily move. More on silver towards the end of the show. Absolutely a kind of strange altered day happening in the market. And the reason that I say that is we have a dramatic plunge in the Standard & Poor's 500, Dow Jones Industrial Average, in other words, U.S. equities. Those are down, and those are down fairly substantially. Also, when we look at the dollar index, the dollar has been down, this being the third day in a row. And as we just put up previously, when you look at the Kitco Gold Index, you realize that we're actually down about $10. The weakening dollar is adding about $6+, and that's what's giving us our net change of down about, call it 410. Interesting though, as I watched the markets trade last night, we approached that high being at around 1241. That would be the ask. I believe I have a bid chart out here, which would then show the high at about 1240. And I've got a couple of different fib retracements. Let's compress this so I can define where these are from. We use these over the last couple of days. We have one larger fib retracement, and that's starting really from about 1392, this top up here. I've got a second one starting at 1346, and these give us more of a long-term perspective in terms of the market move itself. When we do that, we get this little area, which starts at about 1230. It's a 38% resistance of the the longer of the two fib retracements, 38%, and then a 50% retracement at 1238.93. So call it 1239, and that absolutely seems to be where we're pegging our resistance at. When we look at this daily chart, what you can see is tweezer tops. Tweezer tops, simply a candlestick pattern in which you have equal highs on two candles in a row. Very, very small bodied candle, very, very doji-like or star-like, and it is in the evening position. We'll see what we can make of that. But as I watched this market trade up, it was interesting to see, because my sense is that if we get any kind of substantial break really above this point, now I'll show you why I'll really have to use a weekly chart, we could be signaling really the fact that we have seen the bottom and we are in fact in a pretty substantial rally. The rally that I had thought might start somewhere in January actually began in December. But prior to that happening, we've got to see one thing occur on a technical basis, and that's this weekly chart. Now, I have this chart blown up quite a bit, but just to give you an idea of what we're looking at, and I will compress it so you get an idea in a second. This is the long-standing descending resistance line that we established from the series of highs here, and then we had the long-standing support line. And this right here is what formed our compression triangle. We broke below the compression triangle. We hit a low of 1131. So we hit that new low. But as the market began to move up, what we really want to see is whether or not this market can trade above this long-standing resistance, because we can carry this line over, and what we can see is a move breaking above this would really signal a pretty strong breakout. Now, with that in mind, I can actually go and compress this chart so you get a better sense of what we were talking about. It's just much harder to see, of course, when we have this compressed like this, but this is what I'm talking about, and that is when we look at this chart, here's our long-standing resistance, and the fact is we are just up at it, and so it's still acting as though it is resistance. In other words, a market that's moving down is going to have a series of lower lows and lower highs, which we have gotten on a longer term basis, because 31 certainly beats 80. And as I said, we haven't gotten a new high. So this is that critical point. Unless we break above that point, my sense is that we could still be in this defined downtrend, and this rally was simply a counter trend to the move down that we experienced from this point, which is why we have the fib retracement starting right in here. And then again here, because those are the 2 points of the resistance long-standing trend line that we have drawn in. And so traders, this is again another way to look at that. This is a 3-day chart, but similar in terms of our descending resistance line that we had put in for a trend. Now, why did I say that we're witnessing a kind of peculiar day? Well, let's take a look at the markets that we have been looking at that truly influence gold itself. First, the equities markets. So traders, I've pulled up the mini S&P 500, that's ES, continuous contract, standard candlestick format. Candle size is a half a day on these charts. I've really plotted one fib retracement from this low at 1814. That's after this market came. This was our previous high in the marketplace, just above 2000. Market genuinely moves to 2080, tremendous move up, but as you can see, we're under dramatic pressure. This and that other small candle being our half-day candles. Of course, this is when the market opened here in the US, and so you can see it's a pretty dramatic fall. Another way to look at that would either be a daily or a weekly. Let's go ahead and pull those up. And so traders, we're looking at a weekly chart, same thing. The S&P E-mini contract, you can see the kind of damage we're getting right now trading at 2024. So down substantially on the week. And then if we look for the daily moves down, we can really get an idea. Let's make sure that this is properly updated with historical data. And you can see over the last 3 days, we've had this fall. Yesterday, really a in-between day in that we made this new low, but it closed up near the open of the market, giving us a doji, but that wasn't to really last because you've got this tremendous sell as we go into the market, now trading near the lows at 2024. So that should provide some bullish momentum for gold because it is a safe haven asset, and as funds move out of equities, they're looking for places to move them in. One of those certainly isn't the dollar index. Let's take a look at that. And we can certainly see we're looking at a daily chart, continuous contract of the dollar index, now down around 88.25. That's after hitting a high just above 89.50, this being our third day in a row that the market has traded lower. Where do we see technical support in this market? Well, you can see this cluster right here really doesn't appear till about 87.50, so we're still a good 75 points from there, but I think that it's somewhere in this area we should find some support just based on most recent trading activity. Now, that provided a $6 plus in strength for gold, but gold still couldn't overcome that kind of momentum, and as I said, is still currently trading slightly negative, and that to me is rather odd. I would have expected a day with the equities down hard, the dollar continuing down hard, that we would see more of a push within the gold market. That's obviously not to be, but those are my observations as of today. Now, I pointed out technical evidence we really need to see before we can conclude that what we have witnessed when the market hit 1131 was a key or pivotal reversal. If in fact that is the case, that would be ending this fifth wave here. That fifth wave would also conclude this major fourth down and would signal a major fifth move or a wave one up. And with that in mind, really when we look at our 2-week chart, this is of course a much longer term chart to look at the major and current intermediate Elliott wave count, we can see that over the last 2 weeks, we've seen an extreme move up, this being what? Roughly a $100 rally off of the lows of 1131, now at 28. So the question is that what we've witnessed, and can it break above really this long-standing resistance? Because on a technical basis, that's really what I see being necessary, which is to break above that point. At that point, I would have to give my vote, so to speak, to any kind of bullish faction and believe that we could have seen an end to this long corrective wave. Up until the point that it breaks through there, it's still very possible that what we are experiencing is simply a counter wave to the most recent down wave, and we've seen it retrace about 50% as of yet. For that reason, we're still flat in the market, no open positions. I had thought about getting long yesterday, but I wanted to see if we saw any kind of follow through after that dramatic day. We did not, so we are standing pat. What about silver? Well, as I talked about the other day with silver, I really believe we absolutely have real resistance in the market right at this particular point, which is just where these highs are. Not quite tweezer tops because you've got a higher high on today's activity, although it's currently trading up ever so slightly. That is a green candle, but probably up by about 1 tick on the day, so 1 or 2 cents on the day. Now, when we look at this, and let me see if I just can't shrink this down. What I'll have to do, of course, is just convert it to a weekly, and let's kind of compress this a little bit. And in that way, you can see what I'm looking at. We talked about this again yesterday. We need to see some sort of a move really above this. You can see this being a supportive area, and then I believe has now become resistance. So let me draw this line to the top of this. But we really need to break above this particular point. And if we do break above that, I think we've got easily a dollar move to the upside, $18. We've really seen it come dramatically off this low when it touched at 14. Gold did not make that kind of a new low. You can see that matches precisely with this low at 2010. For that reason, my sense is that at some point we are going to form a base. We are going to see this market turn around. We are seeing the basic scenario that we would need to see to be able to confirm that. However, we needed to break above certain points before we can ascertain that there is concrete technical evidence to support that hypothesis or assumption. And as you know, as a technical trader, and that's what we're working on here with numbers, we can't predict the bottom on the bottom. It's got to move well past it and break through those parameters before we can say in hindsight that was the bottom. That is a limitation of a technical trader. So be it. We're going to remain flat. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Thursday for another daily update review. Bye-bye.